Okay, hey everybody, this is Brett. Just want to do a quick video and update you on the markets and the crash here for today. So we're going to move pretty quickly, and I'm going to go through all of this in order here. Basically, the Bitcoin crash, the TLDR, is the massive liquidations that we saw on the Binance chain mostly. So I know I'm kind of in the way here, so I'm going to hop over to the other side of the screen. So basically, yeah, so you can see 24-hour wrecked liquidations, 350 million of longs. So basically, there are a lot of leverage traders in long positions, leveraged long, and we can see in the heat maps, which I'm not going to bring up the actual heat map on high block, but they've now wiped out that liquidity and reset the funding rate. So that's actually good, and this is a good opportunity to be buying the dip. At some point, I do think we're going to head a little bit lower, so I did want to pull that up. And so let's jump back over, go through a little bit of news here. And so why the Bitcoin price crashed by 6% today? And the reasons are, as I just said, lots of liquidations, mostly on Binance. So 121,000 traders liquidated, contributing to this. And as we know, that leverage is dangerous. We see a lot of that over in the offshore, the non-US exchanges like Binance, and also like Bybit and BitGet, all of those, Femex. A lot of liquidity over there, a lot of leverage contributing to that. And so when liquidations happen, of course, the bigger players are going after liquidity so they can then resell that. The market makers might have a big buy order that maybe an ETF wants to come in and buy. But there is some other news we want to talk about, and we'll jump into that next. There was an announcement that the DOJ is signaling they might be moving $2 billion worth of Bitcoin, possibly for sale, but I'm going to talk about why we shouldn't worry too much about that, and why that's mostly going to be handled on the OTC exchange anyway. So just skimming through this here, what caused the Bitcoin crash? Liquidations, as we mentioned. And as we know, what happens is that if they drop price, it triggers stop losses, which then triggers liquidations. It triggers more stop losses. So fortunately, we didn't see a big capitulation event, and we don't want to see that for reasons I'm going to share with you. Basically, some of our indicators that called the exact top in the 2021 market. I don't want to see these indicators trigger on a weekly basis, because then we need to get out of the market. Not financial advice, but we'll be advising our clients to get out. And but fortunately, we're not seeing that at this point, and I'll show you what I mean by that in a minute. So shift in sentiment, we were up in a sell zone for quite a while anyway. Just to hop over there briefly, this red block here are sell blocks. This is one of our new order block indicators, and we were just sideways for about a week up in this range, and so any news catalyst was ready to drop that price back down, as we saw happen here today. Fortunately, catching and holding in this upward trending channel, and it's not clear here. I'll go back to the news in a minute, but we're either still in a bullish parallel channel, which would be ideal, and I'll take the bearish one off. So this would say, this was just an ETF anomaly in this circle, and we are in a nice steady uptrend. So that is possible, but it's also possible that we're going to see a little deeper dive down into this zone down in here and into these order blocks, the buy blocks. And so, not a good thing, not a bad thing, just a thing. And we'd want to be ready to buy that dip. If we do come down on these buy blocks down around 60K, I think that would be a good opportunity to start buying again. And as of now, we don't know. So I'm going to leave both of those on there. We'll come back and look at some more indicators in a moment. But just to unpack that a bit more, I've talked about this and the economic uncertainty. Bitcoin's historic volatility, we've had 7 up months in a row. So that's worth noting. If I jump over to a monthly chart here, we did have 1, 2, 3, 4, 5, 6, 7 months in green candles. That has never happened. And so we have to be mindful of that, and really a pullback and a rest here would be a good thing. Nothing goes up forever. Even in the bull here, we had 6 up months. Now, somebody mentioned maybe back in 2012 there was 7 up months, but I'm not going to count that because it was so long ago. And even then, I don't know, 3, 4, 5, there was breaks in between. So we at least want to see a bearish month, a little bit of down on a red candle to basically let us reset. And but ideally, on the other hand, would like to see us hold. I just put all those other lines on there by accident. Hold above this prior resistance area. So, I don't know, guys. If we just stayed here, I wish there was a new monthly candle starting tomorrow, because then we would have held above the old high partially on the closing monthly basis, of course. But you know, look, if we come down and reset a little bit, nothing wrong with that, because it gives us an opportunity to really get ready for the next push higher. And so let's come back to that in a minute. I want to get to the next news story about the 2 billion in potential Bitcoin hitting the market, and why I wouldn't worry too much about that. So I think that mostly covers this. That's all I wanted to talk about there, actually. So on this next article by CoinDesk. So apparently, so today also spooking the markets, most likely Silk Road Bitcoin, worth 2 billion, was moved by U.S. government on-chain data suggests. And the last sale, the last confirmed government sale, was just more than a year ago. So it sounds like that we know the address of what they were using. But here's the thing. The thing is, this is going to be sold on the OTC markets. We're not going to see this dump on the exchange and suddenly crater price. That's not how these things they operate. All you have to know is that if it goes on the OTC market, we might see ETF buying slow down the demand on the spot market, right? So let me just hop over here. In terms of the ETFs, we have BlackRock still at 17 billion assets under management. We've got Fidelity at 9.9. That was a little over 10 yesterday. So still, you know, not seeing really selling on the ETFs. 27 billion here, and as they continue to buy, what is another 2 billion if the DOJ were to start selling? They would be buying it on the OTC markets, kind of like when the ETFs were approved, and there was selling pressure because everybody thought there would be massive buying pressure on the exchanges, but in reality, IBIT and Fidelity were buying from GBTC on the OTC market. So a little confusing, but then once the OTC sales volume and availability and supply, rather, once that dried up, then they started buying in earnest on the spot market. So that's what I'm saying is, if the DOJ started to sell a lot of Bitcoin, 2 billion is just a blip on the radar, by the way. It's like 0.2% of, the $1 trillion that's probably out there, even in BlackRock originally saying 10 trillion. So what that would mean is an easing of the buy pressure. And I don't have the chart up of the IBIT on this, and I don't know if we have time to get into that. But all that matters is, look, if we start pulling down at this green zone, personally, I would be potentially buying at 65K. It looks like that candle came right down to that 65K level, got bought up a little bit. Maybe that was somewhat short covering also. But down in these green zones, right, 62K, 60K, I'd be a buyer. Not financial advice, but these are levels where we can see there's buy pressure, and it would be a good area to kind of start buying the dip, because I do think we go higher, and this is obviously not the end. Now, the only caveat to that, let me come back. I'll talk about the caveat in a minute. I think this is about all I wanted to cover on this. This is 30,000 Bitcoins, a wallet tagged belonging to the U.S. government. Basically, it's saying moved 30,000 Bitcoin to what's reported to be a Coinbase wallet late Tuesday morning. So that would have certainly spooked the markets and the other whales. Are they going to move it to Coinbase to start selling on the exchange? Again, probably not. Probably on the OTC markets, where it won't move price that much. And if you don't understand what that means, essentially in the old days, remember, stocks were handled as pieces of paper or bearer bonds, as another example. So the owner or the holder of the paper, if you had an old stock certificate and it was valued at $100, you could sell it to your neighbor for $50, hand them the paper, and that wouldn't affect the market value. So same thing with OTC, they can do transactions that won't necessarily affect the supply demand on exchange, right? So anyway, just keep that in mind. Let's see, last confirmed sale. We talked about that. Again, Silk Road coins, and that's about all there is to unpack there. I don't know that there's much more to talk about. Let's jump back into the charts and just see. So if I click on that, see if there's any latest news. Let's see, spot Bitcoin ETF trading volume in March tripled to 111 billion. That's huge, and that shows great liquidity, a very active market. And okay, some regulation in Argentina, no big deal. All that I'm really looking at. You know, I say 100 times, show me the charts, I'll tell you the news. We were up here at overbought selling territory for, let's see, daily, so basically a week, and this was unsustainable, really. There were not enough buyers, had a bit of bad news, over leveraged, and the market makers wanted to come in and wipe out some of that leverage. So that's what happened. Dropped it down, held the channel nicely. So I wouldn't be surprised to see a little bit of a dead cat bounce here the next day or two. However, you know, on these charts, it does indicate, and what concerns me a little bit on this weekly chart, big bearish engulfing candle in and of itself is not dangerous, but what is concerning to me a little bit is if we were to get an ERI, our early reversal on the downside. And the reason for that would be a little red arrow right there. The reason for that is that exactly is the signal that we had back here at the last market cycle top, a bearish early reversal indicator, a bearish engulfing candle, and also down on our trend strength indicator. These three things is enough to tell me that. Also, our new RSI Pro, this shows bearish divergence, and so we had clear signals back in the last cycle that even as early as January, when the bull market started price-wise, we were seeing bearish divergence all the way through. These red circles indicate market cycle tops, and that also triggered right in this range. So these are a couple things we're watching here, and fortunately the RSI is not giving us a local top. It's just kind of cycling over, and the TSI on the weekly time frame is heading lower, but it still could bounce. My trigger there would be if this were to break below 80, okay, and there were a bearish ERI, I'll be advising people to get out of the market. Never selling all of it, but taking half or 2/3 off for a better buy entry. Again, I'm not seeing that at this point, so I'm not concerned. But either way, we're going to be looking for the next bullish set of signals that we have, our bullish early reversal indicator, trend strength indicator, and that RSI. The RSI is brand new. So I'm not here to talk about that, just kind of showing you what I'm seeing. We did have a lot of money flow here at that 56 up to the 60, 59K level. And so I would imagine that would hold, although there is one other thing to talk about that no one else talks about, is these big vector candles typically retest the center line, and I haven't seen that on here, but we also didn't see it all the way back down here at 32K, and I don't think we'll see that. So I'm going to dismiss that a little bit. This time is different. I did hear there was a CME gap that was just filled, and I don't see it on the weekly time frame. So let me just go to the daily. These don't have to fill. There's still one down at 98.75 that hasn't filled. A lot of them did, but yeah, the daily CME gap did fill right in here. That filled today, so that's a good sign. They act as magnets, price magnets, and very often they do backfill. And so, you know, look, in that sense, that's been filled, holding the 21-day EMA. We could go either way here, folks. What I also want to show, though, is this macro, potentially a macro bull flag. And so basically, if this is the flagpole and this is the flag, if we do come down to that 60,000 level, again, I think that's a great buy opportunity, and then break back up above and through that sell pressure, the measured move from the flagpole to the measured move takes us up to about 120,000, well over 100,000, which I think is warranted. You guys have seen this chart, I think, and I've just revised this as well. So this is my path to potentially 155,000, and I've just added a 250,000 option. So these blue lines are the bars patterns from the prior cycle, and they are never going to be exact, but you can see here that they are pretty close, and you can maneuver them for the most part. I adjust them a little bit for account for current price action. It's hard to speak and do this at the same time, but it does overlay pretty closely, as you can see right there, and even with today's dump right there, because see this, we had that same kind of pattern in the last cycle. So that's as close as I can get, and it doesn't have to be exact, but we can see that it tried to break through local highs several times before. So we're pulling back finding support. I think we do break back above the 73, 75K level, and then it's a straight shot up. I would buy the breakout. I also would buy the pullbacks, as we just talked about, because once we break and close above 75K, I think we're going much higher and probably straight to 100K, as you see here. And then brief hesitation, sell off at that big round number. That would be expected. And then we could see a strong push right up to 155K, because that's this is the 1.618 projection and the 2.618 Fibonacci, which again, those forecasts to the last market cycle high exactly, using the previous cycle high low 2017 to the bottom, that's where we at the 3.618 in the last cycle. So that's why I've drawn these Fibonacci levels tend to be somewhat self-fulfilling. So, does this happen exactly? Not necessarily, but I can see 155 coming up. That's at 2.618. So these are confluence. These are showing confluent signals, because the Fibonacci would land here. Also, if you haven't seen my study, Path to 155K Bitcoin, it's on TradingView. I've done a number of iterations on that, and the 10 factors that could get us to 155K, even 210 Bitcoin, and that's 210 right here. Isn't that amazing that this bars pattern also signaling 210,000, which is exactly the 3.618 projection? Who knows, you guys? Just got chills, so it must be true. And so this would show, based on the bars pattern, here's the thing. I think this year we could get into the 210 level. I think 2025 we sort of tiptoe our way up to 250. Certainly possible. This shows 235. Who knows? That's kind of a wide range. I just called it 250. Some people are saying 500K Bitcoin this cycle. I would take the half on that. And of course, there are much higher estimates out there. But, if you go with the half, the median, usually a good idea. And pretty close, and you can't complain if we get to those levels. So I think that's all I wanted to share with you, everybody. And so if you like the content, make sure to like the video, subscribe for more of these. And as always, thanks to Max for letting me be here and share that with you guys. Hope you enjoyed. And I think that's all we wanted to talk about. I will actually I'm going to turn on my radar really quickly, but I have to change my location or I'll be covering it. And this is something else I like to keep an eye on. Where is that? The average true range is still bullish. I forgot to show you the radar on the Bitcoin here. 2 seconds, because this gives us a good macro look at what's going on. And where is that chart? I know I have it. Here's the radar down in the lower left. So not too bad. The quarterly still bullish on the 3-month. When this turns all red, multi-time frame, the radar is all the way over in the corner, that thing that's mostly red and green that I'm circling down in here. So the daily bearish, weekly bearish, monthly bearish, okay, but we have a quarterly still in bullish market structure, and these are derived from a modified stochastics oscillator. So it's just, as the name implies, it's a multi-time frame radar that we're looking at. But here's this nice arrow. Again, do we hold here? Do we bounce? Probably. If you're fully invested, if you're nervous, taking a smaller loss is easier than taking a full loss. So I wouldn't sell everything. But if you think, as I do, we could go lower, and probably will, if you took some smaller losses and bought it back lower to dollar cost average, then your break even on any loss from this week would be sooner than if you just held all the way through. Certainly up to you. I can't give financial advice to you guys, but that's the way I would play it, and where most professionals would do, legging in and out of positions. And by the way, I was selling Bitcoin up in this area. I sold mine 2 days ago and bought in some alts. What are the alts going to do? Remains to be seen, but everything's red today. I wouldn't be looking for any standouts, although Litecoin was up earlier today, which is interesting. But it's a nice ebb and flow of the markets. Here's Litecoin, surprisingly higher. Part of the reason is I think Litecoin was just declared a commodity by the CFTC, which makes sense because they are a hard fork off of Bitcoin, which is proof of work. So I always look for strength when the markets are down, when everything else is down. CPAD might be one to keep an eye on, by the way, on the SUI. protocol is pronounced sway, by the way. Forgive me. So that's my signal to end the video. But keep an eye on these. Anything showing strength in a bear market, usually once the bull comes back, does fairly well. That's on MEXC, which isn't really available for most people in the US, but anything's possible if you're resourceful. And with that, you guys, I'll just give you a final wave and say thanks for watching. If you like the video, make sure to hit the like down below and leave your comments. Cheers, everyone. Take care.